I'm Dawson Schmidt here with the latest stories and developments in this week's Commodity Roundup on Trader PhD. Winter Storm Fern wreaked havoc across a large swath of the U.S. over the past few days, leaving noticeable damage in some areas. One of the major impacts of the storm was the massive ice accumulations that hit parts of the Mid-South, leaving behind substantial power outages. The storm also had agricultural impacts from timber operations to broiler and dairy farms. A positive impact, though, from the storm was adequate snow coverage for much of the winter wheat areas that helped shelter crops from extreme cold. However, USDA meteorologist Brad Rippey says areas that missed out on the snow coverage are still at risk of winter kill, particularly from Nebraska, westward, and parts of Montana.
That is an area we'll have to watch moving into spring for areas that may have experienced winter kill. And sometimes that winter kill can be exacerbated by already existing drought-related problems.
Rippey says an assessment of potential damages could take weeks, if not months, to fully realize. Last week's cattle on feed report unsurprisingly showed lower year-over-year U.S. feedlot supplies, but the report did continue to confirm limited herd rebuilding in the U.S. The January 1 feedlot herd totaled 11.45 million head, down 3% year-over-year. There continues to be a stark difference between northern and southern states. Feedlot supplies are 9% lower in Texas and 10% lower in Oklahoma compared to a year ago. Meanwhile, Iowa and Nebraska experienced an increase of 5% and 2% respectively. Quarterly data showed that the percentage of heifers on feed rose to nearly 39%. USDA livestock analyst Mike McConnell says the higher percentage indicates that producers are still marketing their heifers rather than retaining them for breeding.
So the fact that it's still in the upper 30s indicates that strong prices for feeder animals is still enticing producers to market their heifers and to feedlots rather than retaining them for breeding.
December feeder cattle placements totaled 1.55 million head, down 5.4% from a year ago. That was the lowest December placement number since 2014. Analysts had expected a 6.9% drop, but an unwillingness to retain heifers likely drove higher year-over-year expected placements during that month. On Friday, the USDA will release its biannual cattle inventory report showing a breakdown of the total U.S. cattle herd. Friday's report is expected to confirm little to no heifer retention. President Donald Trump offered biofuel groups hope about the potential ethanol demand. The president made its way to Iowa on Tuesday and reaffirmed his support for a bill approving year-round sales of E15. Trump said that he was trusting leaders to get a package sent to his desk to sign, effectively raising blending limits for ethanol fuel. While not a mandate, USDA Secretary Brooke Rollins said the action would allow up to 2 billion more bushels of corn to be consumed domestically. However, achieving higher demand would not be an instant realization if passed. Ethanol has been a bright spot for corn demand this season. Output has been running well ahead of seasonal averages since the marketing year began. Much of that demand growth has been attributed to ethanol exports, which represented about 13% of ethanol produced in 2025. Thanks for watching. I'm Dawson Schmidt, and this has been Trader PhD.